The history of stock exchanges dates back several centuries and can be traced to various regions of the world. Stock exchanges are institutions where traders and investors can buy and sell shares of publicly traded companies. These exchanges provide a regulated marketplace for the trading of securities, facilitating capital formation and investment. The origins of stock exchanges can be found in the trading of securities and commodities in ancient times. In the 12th century, traders in France began gathering at a house in the city of Bruges, where they would buy and sell goods on behalf of others. This house became known as the Bruges Bourse, and it is considered one of the earliest examples of a stock exchange. Another notable precursor to modern stock exchanges was the trading of shares in the Dutch East India Company. In the early 17th century, the Dutch government granted the company a monopoly on trade with Asia. To raise funds for their expeditions, the company issued shares to investors. These shares were freely tradable, and a secondary market developed in Amsterdam where investors could buy and sell them. This market, known as the Amsterdam Stock Exchange, was the first official stock exchange in the world and began formal operations in 1611. The concept of organized stock trading spread to other parts of Europe and North America in the following centuries. In 1698, the London Stock Exchange was established as a formal marketplace for securities trading. The exchange started as a coffee house where traders would gather to conduct business, and it gradually evolved into a regulated stock exchange. In the United States, the Philadelphia Stock Exchange, founded in 1790, is considered the first organized stock exchange. The New York Stock Exchange, NYSE, came into existence in 1817 when a group of stockbrokers signed the Buttonwood Agreement, which established rules for securities trading. The NYSE grew in prominence and remains one of the largest stock exchanges globally. Throughout the 19th and 20th centuries, stock exchanges continued to emerge around the world, playing a vital role in the growth of capital markets. Notable examples include the Tokyo Stock Exchange, 1878, the Bombay Stock Exchange, 1875, and the Hong Kong Stock Exchange, 1891. In recent decades, technological advancements and globalization have transformed stock exchanges. Electronic trading platforms have replaced traditional trading floors, enabling faster and more efficient transactions. Additionally, the emergence of multinational corporations and increased cross-border investments has led to greater interconnectivity between stock exchanges worldwide. Today, stock exchanges serve as crucial pillars of global finance, facilitating the flow of capital and investment. They provide investors with opportunities to participate in the ownership of companies and contribute to economic growth. With the continued evolution of financial markets, stock exchanges are likely to adapt and innovate to meet the changing needs of investors and the global economy.